Got a great show planned for you today. Chase just finally informed me what the word blurb means. Got a lot of tariff craziness going on. Is Trump going to fire Jay Powell? Our stock, is it by the dip time? Gold, Bitcoin running, rates up.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any references to performance of securities are thought to be materially accurate and actual performance may differ. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional.
And we are back with another edition of the Daily Dots, and I'm joined as always by the brain trust himself, Mr. Chase Taylor. So it is yet another day dominated by the loser, Jay Powell, because he won't cut rates.
He was major loser, by the way.
Major loser.
That's a rank. So
yeah, it is.
He's going up for lieutenant colonel next year.
I got to tell you, this is a hard one for me to square. And the reason why I say that is I think a lot of things up until this point, especially as it related to tariffs, very outcome dependent. You know, you and I have discussed it. We don't have the same opinions, but, you know, the take I've always had on that whole topic is if this approach gets China to the negotiating table, I was going to judge it all on how it ends. And I think there's a lot of really good arguments to make for that. This seems a little different to me in the sense that I would love to be behind closed doors in a discussion and just go, I don't expect what you think you're going to get out of this.
So I'll play the awkward devil's advocate on the other side and say the one thing I can see that does make sense is you build a pretty sweet fall guy to that way. If this goes bad and you end up in a pretty ugly recession or whatever, you could be like, hey, when the tariffs, like everything was fine. It's just, if he just would have cut rates, would have been okay.
No. So that's a good point, but you're in an environment where even he has to know, no matter what goes on, right or wrong, you're going to be the fall guy.
Yeah. At the end of the day, right.
Yeah. I mean, whether
it's like firing the defensive back coach or something. Yeah.
Well, yeah. I mean, and
cool. You're the head coach.
Right. And not just that, but also on the flip side, if a child's crying somewhere in Kazakhstan, the mainstream media is going to find out a way to make it Trump's fault. Right. So, I mean, again, you've got to know those things going in. So I just don't understand what he expects to get from this. I don't understand what he expects to gain from it. You and I have also talked that I think if you really want the long end to go down, if you want the 30-year to go down, cutting rates, I don't think does it right here.
Right. And I mean, you saw it today with backed up again, another like 10 basis points. So it doesn't appreciate this. Well, one thing I will say that I think is important to note here is, let's say he does it. If he doesn't also get rid of a few folks on the board of governors, it doesn't matter because they could just vote against a lackey Fed chair and that Fed chair wouldn't be able to do what they wanted anyway.
Right.
You got to get a plurality of the committee, which would require him to smoke a decent chunk of the governors out, which maybe
horrible.
Right. Maybe you do that, but then
horrible precedent.
You're already seeing capital flight from some people worrying about, basic trustworthiness of the U.S. on some just old school institutional things that we've always been good at that maybe we're not anymore. And some people are taking their money out and asking questions later. So to have the executive come and take out, multiple people at the central bank would be.
Well, especially while you're dealing with what you're dealing with on the trades, right? You need all hands on deck. You need to be focused on these trade issues, starting another brush fire off on the side right now. That quite frankly, the other thing too, is you don't have nearly as much control over this as you think you do. You know what I mean? Like this thing can spin out of hand really quick. And look, if the thought by those inside the administration is this is nonsense, maybe they're not cutting for political reasons, I get that. I think you can make an argument either way.
I agree.
But I do think that, again, it goes back to, and I don't know if this is Powell's thought, but it goes back to, I want looking at the setup, it's, hey, I want the long end down too. The reason we're not cutting is because we think that that's the best way to get there.
And my suspicion is him and Besant have probably had that conversation and are on the same wavelength. But you gotta get the boss on that wavelength, and that's the harder part.
Yeah, and I don't know that and you don't know what has Besant alluded to that. Has he made comments to that dynamic? Has he said anything about that, about getting the long end down first? The quickest way might not be to cut.
I don't remember if he said that, not explicitly. I would argue if you read between the lines, he has alluded to it, but not explicitly.
Yeah, and I don't know if that message is getting through to Trump. That's one of the tough things about reading situations like this, because you're like, look, how much information is this person dealing with, right? How much of the story are they getting? Are they getting this information, or are they just disregarding it?
Yeah. So, and this is where like all these Wall Street Journal and New York Times articles from people on the inside are helpful. Like, you got to worry about how accurate it always is in real time, but there have been a lot of articles lately to give you a little bit of a idea of what's going on, and the ones that have come out in the last few days are like, in reality, like, he's been talking about firing him for months, but recognizes that it's dangerous and isn't going to do it. So to see,
so he's just trying to pressure him into cutting rates then right now.
Yeah, which, I mean, well, it's not like Powell's going to cave to that. Like, he doesn't care.
Well, no. And the other thing, like I said, like I really wish that message would get through to him and the administration of, hey, I don't think you're reading these cards right. And I'm not saying that you're stupid and I'm smart. I'm not, but you want rates down, right? You want the long end down. You cannot risk, what's her name?
Oh yeah, Liz Truss moment.
The Truss moment. Yeah. You can't risk that. You can't risk you think that things are uncomfortable now. Look at a 30-year with a 6 handle on it. Right. And I kind of get the feeling that you're not that far away from that. Meaning if he pulled the trigger on a Powell thing, I don't know. I'd have to go look at the charts and stuff, but I wouldn't be shocked if that alone drove the 30-year to a 6 handle.
Yeah. I mean, it's not that difficult to imagine a scenario where you get the news that he's fired and that Kevin Warsh has taken over. And then, his first press conference is like, yeah, we're going to start cutting rates here real fast, maybe 50, maybe 75, something like that. And then the next inflation print's a little hotter than expected. Like all the next inflation expectations print comes out hotter than expected. Next thing you know, yeah, like why would you not be, at new cycle highs on the long end?
Well, the other thing too, I would tell him is, hey, sit back and play a little bit of dollar milkshake game too, right? Like stay a little quiet. If everybody else is cutting and they're stimulating, you're going to get some of that too, right? If you don't alienate it.
Yeah.
Right.
And that's been one of the notable things in the last, I don't know, let's call it 3 weeks is, yeah, our rates have been flying up, but they haven't been in a lot of Europe. Like you look at German and Italian and French yields and stuff, and it's been down, and while ours are up. And that kind of goes back to the thing we started flagging either this last week or the week before at the end was the fact that long-term yields in the dollar normally, it's like a trailer hooked to each other, and then all of a sudden it broke and they went in the opposite directions. And our buddy Paolo Macro, he mentioned something that I thought was like a really good analogy. Like that moment where those broke, that relationship broke, reminded him of when gold and real yields broke their relationship after the Russian invasion. Like that's just a really good way of looking at it, because that's an important relationship. Like the 10-year yield and the dollar doing the same thing, and all of a sudden not, like the signal and the information value in that it's big. It's a big deal.
It is. The one thing that I would caution though on that is that I do think that there is a big, and for some people, I mean, and for some from some sources, I think it's intentional and it's intentional obfuscation. But I think one of the things to keep in mind too is that there is so much talk about, I heard another person thrown around, and I think it was listening to Dimitri's interview with LaShrub and Paulo Macro. They were talking about EM, the EM dynamics that are appearing. I continue to believe that's a really, really bad comp. And I understand what people are saying, but to say that without any caveats is to pretend that the U.S. is to pretend the U.S. was coming from a normal place, meaning what was happening. And one of the arguments you and I were making was, look, we expect to see dollar down, yields down, stocks down, because the U.S. markets represent 70% of market capitalization. Like, something's going to make right. This doesn't make any sense. Flows need to go out. So I think that there is certainly some concern out there on the financial side, but where I think all of this is getting lumped into this is all, that he's trying to, fire Powell and all this stuff. I'm sure that's having an impact, but I think a large amount of this was going to take place anyway. And right now, when I look at it, it's sort of hard for me to delineate. If you just look at price action, other than a couple days where you had some really big drops on the dollar, it has looked like capital flight, like fairly orderly. Just looking like the repatriation. I continue to think that it just looks like a lot of capital.
What it looks like is foreigners taking their money, some of their money home.
Yeah,
for sure. But I'm okay with the EM comp, but only from that moment whenever dollar and the 10-year, that relationship broke. Before that, I was like, you just can't compare it to EM because that relationship was still there. But if we hold here with the dollar goes down with rates going higher, like, to me, that is how emerging markets, their markets, their financial markets function. And Powell's been writing about that for over a year, and I kind of just rolled my eyes at it, like, I don't get it. I don't know what you're talking about. But whenever I saw the dollar 10-year thing break, I was like, okay, well, that's a little emerging markety to me. So see how it goes. And I will say, I mean, you're absolutely right. Like, we had so much of the world's assets concentrated here that, it's a bug looking for a windshield. It just took something to reverse it. But I think it's important not to cheapen how just big of a moment this is, that it's happening, and the knock-on effects of the ramifications of that reversal of capital flows, how important it is for the whole world, how bad it is for us in some ways, and how good it is for all the people that get the money back essentially in other ways. And it's easy to kind of map that out for 6 months, but then, where are we at in 5 years? Like, it's difficult and in some ways potentially like unnerving.
No, I get the comps when you're looking at the movement, the price movements, right? I get that. And I don't think that, he's wrong. I mean, it does. I mean, undeniably, you're like, boy, I've seen this before, right? This looks like EM problems. It's just hard for me to delineate how much of that's just what was going to happen anyway, right? Like you said, bug looking for a windshield. Analogy I used was bubble looking for a needle, right? Or a pin. It couldn't continue. What else done you see? We still haven't done a rundown of the indices. Why don't we go through that real quick?
S&P closed down 2.36, and it was down over 3% for a good chunk of the day. So a decent little comeback, although obviously still a terrible day. Q's down about 2.5, small caps down 2, equal weight down 2, Mag 7 down 3 1/3. And again, overseas ex-US stuff down 0.35. So another massive outperformance for the rest of the world. Oil down about 2%, and that was off the lows as well. You had gold up 3.2%, another new all-time high. The rest of the metals flat to down. You had Bitcoin up like 2.4. That's something I want to talk about before we're done. Probably most important things on the day again, dollar down 1%, 10-year yield up 8, but the 20 and 30 up about 10. So that continues to be the most important thing to me. Dollar and rates are just brutal right now. As mentioned, Bitcoin to me,
it's funny you bring
finally starting to look decent.
This.
A bit of a technical, like miniature technical move. that's starting to look like it's getting its act back together. We know like liquidity's come back a little bit lately, which tends to lead it by a little bit. Which was able that helped us get out of the way of the washout in it, and now may help us get back in the way of what could be a decent little move higher. And as gold is like 8 miles from its 200-day, like it make maybe sliding a little bit from gold to Bitcoin as a tactical thing, not like some big strategic move.
Well, yeah, I look. This is not a trade recommendation, but we mentioned this last week. We took some profits on some gold positions today. I hate doing it.
Yeah,
I hate doing it. But when something like this can't keep up. Like I was looking at gold today, and I'm like, what are the odds we don't come back down and test 3,000?
They may be high, but we're a mile from the 200-day, 200-week, and that typically is not where good things happen. It's just like the same argument we made against like Nvidia. It's like it's great. It's just
Yeah, no, it is. And I think it also shows that we don't just hate on NVIDIA, right? Like this applies to everything.
Yeah, our favorite thing is getting spicy.
Yeah. Yeah. And that freaks you out a little bit, especially like you said, it's the time over which this move has occurred and the magnitude of it. I mean, if you look at it in a historical context, is it a 6 sigma move? 5 sigma? I mean, it's got to be up there.
So it's April 21st. And if we went flat from here for the rest of the year, it's still at the best year in over 20 years for gold. Like it's year to date gains are like unprecedented. Like this is insane move for gold. No two ways about it. But at the same time, like we might be sitting here watching the US like in at least half or partially lose some reserve currency status, like for real.
Yeah.
Like that and genuine dollar weakness. Like,
well, there's an irony underlying all of this too. For the sake, now the problem is these things can easily overrun and overshoot. And I'm not saying, but some loss of reserve status, I think, would be good for us and the rest of the world.
Yeah.
Right. So that's kind of one of the interesting other aspects of this is you and I have talked about how prior, you look at 18, 19, the dollar was somewhat of a problem. Now it's being a little bit of a problem in a different route. But you're still, the other thing too is I don't think we should a DXY at 98 is no reason to freak out and run around and scream and anything like that. You press below 85. I think all of its timeline to how long does it take?
I think under 88 and you're at like a 10-year low, and then it's like kind of like, all right, like
it's starting to get a little dicey.
Maybe something really is going on here.
Yeah, but I mean, you're not anywhere close to that right now. I think the world functions much better with the DXY between 95 and 100 than it does at 105 to 110. I don't think there's any issues there. The Bitcoin one is interesting to me though, because, we've looked at it. It's traded so technical. It just looks like one of those classic moments where it's plumbed, tried to get to new lows, really shown some elasticity. They're bouncing off that. I mean, if past is prologue, I would expect us to go from here and push against that all-time high again, right up around that 108 level.
I would argue that like it needs a big liquidity pump behind it, which
you're not really seeing that anywhere.
It's hard to see where that comes from short term.
Well, and then the Chinese fiscal you wouldn't expect that to have the type of knock-on effect on Bitcoin as it did here in the US, right? Because they're not allowed to buy it. I mean, it should have some help. It should help ancillarily, in an ancillary way throughout the.
Yeah, maybe it becomes more of a capital flight type asset globally. I don't know, but I think it needs that big boost from the liquidity side, which we're obviously going to get at some point, but it feels like you might have to go through a bit of a shock to get to that point. And in that shock, it feels hard to trust it. So I feel like it has to be like a very, very tactical, like both hands on the wheel kind of a thing for anyone, messing with it in the near term.
Yeah.
To me, like long term, it's a lot like gold. Like it's just going to be a liquidity proxy, and it's going to do well against depreciating currencies. But
yeah, I mean that one's so tough for me still.
No, I get it. I can't remember who this is attributed to, but they said basically it's scarcity of nothing, which is it's scarce, but it's also nothing.
It is. It is all and one of the things that unnerves me too is how many relatively smart and seemingly astute investors speak about Bitcoin as if it just is a given, right? Like, and I just can't wrap my head around that, and they're like, well, look at how well it's done. And I'm like, okay, well, yeah, but it's still, like you said, it's still scarcity of nothing. What are we talking about here?
Yep.
And they're like, well, what about gold? And I'm like, yeah, I understand where you're coming from, but to make an argument that they're not, gold has utility. It does.
Yeah. At the end of the day, we're like, humans will value weird things at weird prices, some of them for centuries. So
yeah,
as long as it's working, I'm down to trade it. But,
right. Yeah.
But I don't get it either, but I also don't get a lot of things that
have
worked for a long time. So I don't know.
Right. It is a trading sardine to me.
Exactly.
Anything else you see? What else we got coming up this week?
Almost nothing this week. It is a very chill data week. We will get new home sales and existing home sales, which, not nothing. But I mean, today it was essentially nothing. One story I did find interesting today out of China, and that is their EV batteries are getting pretty good.
Mm-hmm.
Like to the point where I feel like you have something that's comparable to an ICE vehicle, and it's over 300 miles on a 5-minute charge.
Wow.
So to me, that's just like getting gas, right?
Well, there was some type of direction on high that came down that I was hearing about this weekend, where I think Z or somebody high up was like, no, we need to get these way better. I want them. I don't want to risk of fires. I want, like they were
right.
like, it was a directive to improve on those. And they're with 5-minute charges, they're getting 300 miles in range.
And
that's shocking.
And CATL and BYD, like both kind of keep leapfrogging each other in the competition domestically there. Both are building really good batteries that work really well. And they're able to sell these things at a good price point. So I would expect that to do well globally. And
Tesla's going to get eaten up.
Oh,
man.
I mean, they can't even almost compete with that.
I know.
And they went from having a mile long
lead
advantage over everybody on batteries to getting destroyed.
Yeah. Well, and then on price points too.
Yeah, they can't. I mean, they can't compete with that.
Well, and that's one of the things that is unnerving about the U.S. stock market. Is having said all this stuff, you look around, it ain't cheap.
Yeah, no.
Especially not given the backdrop. I mean, it's just there, and I would say a lot of names. Yeah, I would say the average name in the it, in my opinion, it is out smoking some kind of drugs somewhere. Not be like, oh, it's so bad, and I'm like, dude, wait till earnings come in.
Yeah, and I mean, we're still expecting 8% earnings growth for the year. And to your point, I wrote an article this weekend about staples, because staples are like up like 8% year to date, doing great because people are hiding in them, which totally makes sense.
Yeah, but then you go look at the valuation.
It's 24 times earnings.
That's nuts
for staples.
Yeah,
for like toilet paper and
and again, you run into the same problem, man. Everybody is U.S. biased.
Exactly.
If you want staples, look around the world.
Yeah,
look around the world.
Right. So I saw this a good tweet. This guy was saying he's talking to like a bunch of like hedge fund friends or something in America, and basically said, explaining like all the problems, and all their answers are like, oh, well, then we got to be like all in like short-term treasuries, as if there wasn't a rest of the earth. Like it was like America was the only place, and he's like, guys, you don't get it. Like, no, we don't have to hold treasuries. Like you can.
There are other markets.
Yeah, you can just whip open the map and go find another place to put some money.
And look, for those people listening, I think it's emblematic of what we've been talking about, right? The opportunity. When you see that and you hear that all over the place, the opportunity is not in the U.S. right now. Like if you want to find easy wins, and they're not all. I'm not saying all markets. International is tougher. I get it. Okay, but there comes a point where price value, the spread in values, the difference where it justifies the risk,
and, Speaking of which, I sent you the article this morning or last night of apparently in Brazil, they're going to start putting some iPhones together.
Yep. Saw that.
Brazil trades at like 6-8 times earnings, like almost double-digit a dividend. Like
Latin America, man. You and I were saying like this. It's again fits the narrative, but then you go look at it. Just again, it's too early. I'm not going to sit there and say it's the Latin American decade, but the setup's there, the value's there, right?
Right.
The opportunity to catch some of that offshoring or onshoring rather makes all the sense in the world to me. And again, you still go through those markets and it's not better values. It's eye-watering, right? The difference.
It's not close.
No, it's just ridiculous. So,
I mean, U.S. staples at 24 times or
oh my gosh,
or single digit in, Greece or Brazil with a much higher yield.
I would like to look at the forward performance of staples when they're trading at 20 times earnings or above, while the market is also trading at 20 times earnings or above. I bet you it's pretty abysmal returns.
And same with utilities. Like, you know how much I loved utilities last year.
They're too expensive.
But utilities are green on the year and very, very expensive now.
Well, and everybody's buying them for yield, right? If you want yield, there's way better yield out there. Right. It's just as safe, So anyway, all right, pal. Well, that about does it for us today. As always, guys, check out the content. We are on video now, and you can get us on YouTube at the Know Your Risk podcast. Also, go to knowyourrisk.com, subscribe to the podcast, and or knowyourriskradio.com. And you know where to find us. So until tomorrow, we'll see you then. You're listening to Know Your Risk podcast. Download and subscribe at knowyourriskradio.com.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.